about a year ago, or less than that, to move its operations, realize what we call the 5 strategic pillars of 40 Oil PLC. Those briefing were on Monday to start the new week. So we have the budget. That's the big elephant in the room, and conversations will be around this particular budget for today and the days ahead. So let's bring in Ada Konobi, who's one of the research analysts at Financial Derivatives Company here in Lagos, to put the commodities into perspective, starting with inflation forecast. Good morning.
Good morning.
So you folks are looking at
16.1%.
Reading for inflation for the month of May, isn't it?
Yes.
What will lead to this?
Well, this is mainly driven by the waning base year effect, and this is the lowest in 4 years. But however, market realities and data, what is going on in the market doesn't really reflect the data that we're projecting. If we go out to the market, food prices are still on the increase, especially foods that are grown in Nigeria. The last time we did a market survey, price of tomatoes, rice, everything are still on the rise. But then we project that inflation is actually coming down. But this is mainly attributed to the base, the waning base year effect. Yes.
So if we add the new budget to the conversation, what does that tell you? This is a lot of money. 7.44 trillion. You analysts, where do you see this budgetary spending from the capital side to the recurrent side as being able to moderate, one, inflation, and domestic agri-commodities prices?
So the first instinct would be there's going to be a lot of cost demand pull pressure, because that means there's going to be market liquidity, and with the release of the Paris Fund as well, there's more money injected into the system. So what we're going to have is there are a lot of consumers. There's a lot of money in circulation with fewer goods, so that's going to put more pressure on our inflationary. It's going to put more pressure on inflation.
You're speaking in economic terms. What does that pressure mean in common man language? Does it mean inflation will go high, or will it mean same or go lower?
Not necessarily inflation going high. Food prices may continue to go back up, because, like I tried to explain earlier, there are still fewer goods in the market. This is planting season. Rains are falling, so this isn't harvest season yet. And again, if there's going to be a lot of market liquidity, consumers have a lot of money pursuing very few items. So market women or traders can decide to increase prices because people are going to, purchase it.
Okay, cool. So let's just look at what you folks push at as burning economic issues. So we have we're trying to tick off where we are right now. Oil is still in bearish territory, $48 a barrel. Well, budget was about $44, $50. Yes, so the gap is still there. A bit of a headroom, just slightly below our nose. We have the acting president signs the budget, isn't it?
Yes.
Okay, so inflation goes down to 16.1%. That's good news. The Senate is calling for public hearing on high interest rate, dragging Godwin Emefiele, the rest of his team, all the bank CEOs, the bankers committee, and everybody and say, look, we need to shave off interest rate. Do you think this will happen? If it happens, if it does happen, how will it impact agri-commodity prices?
So that is going to encourage more business activities, because if the interest rates are high, it's discouraging a lot of people from going to get money from the, getting loans from the bank anyway, because they have to pay back much more. But if they have to moderate, if you look at it, these SMEs drive 88% of economic activities, but then just 3% have access to very good credits from the bank. So if that's moderated, I know there are a lot of regulatory bodies coming together to put this on board and try to regulate prices and try to regulate rates. So if that works, you're going to have more private sector participation. A lot of small investors will go to get loans from the bank, and it may drive business activities from them.
Let's look at some of the good news. You talk about the funds that can now be released for capital projects. We need to fast track that. Looks like the government is going to do that. State governments can now meet some financial obligations with the Paris Club refund,
yes,
almost about $500 billion. But you talk about self-sufficiency in sugar production in the long run, and Aliko Dangote and his team were all over the news. I guess that was last week.
Yes.
Yes, and talking about a sugar refinery, sugar plant, no, not just a refinery, sorry, the planting hundreds and hundreds of hectares. So this would think sugar will go down, even though I try not to add sugar to this cup of tea, try to use honey instead.
Well, Okay, taking it to the international front, sugar prices are actually very low now. There's a lot of supply from Brazil, India, and there's very soft demand from China. I mean, China has actually put a huge tariff on sugar importation, and that is pulling down demand. And bringing it back to Nigeria, the plans to invest massively in sugar plantation is it's very good news. Sugar is used in almost 90% of what we do or what we consume, but then this is a very long-term project. But the good thing is that we have certain incentives in place, and if this materializes, we're going to have to depend very little on importing sugar, and prices of commodities with sugar would have to decline.
You have just about 2 items which you said is the bad news. I don't want this conversation to end on a bad news note. But when you have 1 minute, tomato prices are up again due to seasonalities. Low oil prices remain a threat to external reserves accretion. Do you think any of this will have some immediate impact on prices at the marketplace?
No, I don't expect to see immediate impact. I think the market forces, what are driving prices in the market, it's entirely different. It's extremely volatile. We can't really place our finger what exactly is going on. But most of the traders allude this to high transport cost, very poor storage, and scarcity. Like I tried to explain earlier, this is planting season. Tomato specifically, this is where you grow them, and harvest is coming up. But then it beats me because why should we have scarcity in the planting season? Shouldn't we have very good technology to try to produce this product all year round without having any scarcity? I guess that's where you bring in the greenhouse planting, where temperature is moderated, and this.
Let's continue this conversation on Thursday, and you'll get a handshake from me on Thursday if inflation comes down to 16.1%. So I'm going to hold that handshake until Thursday when you're back 10 o'clock in the morning. Ada Konobi, one of the research analysts from Financial Derivatives Company. Let's come back and return to the budget is the big elephant on Market Street.